Piper with the Thursday video, and it's Thursday the 3rd of October. We're starting with silver this morning. It gives a slightly easier look at the correction. So we've got the low back in November around 13.865, or exactly if you like. Wave 1, wave 2, 5-part 3. Now an A, B, C, possible complete 4. C would equal A down here, so it hasn't actually reached that target. It has hit the 50% though at 16.99 and bounced quite solidly. Let's have a look at the wave pattern in a bit more detail. Right, there are two parts to calling a low. One is the move into the low, so we have got this A, B, and we've got a 1, 2, possibly a 5-part 3, 4 and 5. So even though we haven't hit the target where C equals A, we have got 5 waves down into this move here, suggesting the move is arguably complete. Since then, we have a pretty impulsive looking move up here. 1, 2, 3, 4, 5. So you could in fact have one more one more wave 4 and wave 5 to come. But it's looking pretty good that this actually is the low, and then we want to be looking to go long of silver. Now what's interesting at the moment is we're in October. October is a time when you often see fast action. It's historically well known for things like the 87 crash, and there have been other major falls around the October expiry. So the October expiry comes in on the 18th of October, that's a Friday, and it's the Monday, the 21st, which could be where we see some very fast action. Now obviously we've got this potential low in silver, the same goes for gold, I'll show you that in a minute, and we also have some quite fast action downwards in the equity markets. It's therefore possible that we're going to see some synchronicity or harmonization between these different markets, with the cryptos, silver and gold, going up and the equities going down. Some of you may be familiar with Bill Bonner's gold Dow system, whereby he just every few years switches from one to the other. I forget the actual trigger point, but I think at the moment he's in gold, and once gold reaches a multiplier of the Dow, he then switches back into the Dow. And this has been apparently a very simple and successful system over many years. Silver, gold, and possibly cryptocurrencies are seen as safe havens when the equity markets are going to suffer, so the two tend to move against each other. So looking at silver, I'll be looking to go long once we see a buying opportunity. So having seen 5 up, if that's what we're going to see, then an ABC down again, and look to buy at this point here with a stop perhaps down there, or a stop perhaps after a bit of a blip up on silver. But it's looking to me like the low's in and the next leg up is upon us. Right, gold's even clearer really, in the sense that the A, B and C pretty much hit the target where C equals A, not quite but pretty much. So we're below the 50% level, I think 61% level down here. So look at the action of the subsequent rally. Okay, well a similar pattern really, let's call that a 1, a 2, then a 1, 2, 3, 4, 5, and a 4, 5 to complete. So again, it's looking, certainly it looks like the low is in, a bit more toing and froing to complete wave 1, and then an ABC decline. So, this low came in on the 1st day of October. It's now the 3rd, so we've got 2 days action so far. So another couple of days, really short to see the first move up complete, and the next leg down, the ABC perhaps down. So within a few days, we should see a good buy signal on gold. If we see the idealized pattern, which it may of course vary in various different ways. I'm doing this in the order of simplicity really. I think gold and silver are quite easy things to trade. They tend not to be too volatile. The stop levels are quite simple really, and it's just an easy experience, especially compared to the equity indices, which behave like live snakes a lot of the time, where you have very volatile action and much bigger moves. Well, that depends on your gearing, of course, but far more difficult to trade. And cryptos, new markets, they're far more volatile than gold and silver, although we are seeing similar patterns. But right now we are seeing some harmonization between certainly gold, silver and Bitcoin, which saw a low at the end of October, so just a day or two away from the low on gold and silver. We've got 5 O's up here off the low. I'm treating this as a subsequent. Actually, this count keeps changing. Let me just revise this. Okay, so here's the correct count. This is my current count. 1, 2, then a 5-part 1, 2, 3, 4, 5, 3 wave, 4, and a 5. So a complete 5 up, followed by an A, B, C, B. Now a C wave decline. Okay, so by my calculations, C would equal A at 8050. I would suggest you check these figures yourself. That way you own your own trading. It's better not to rely on other people too much when you're trading, in case they make a mistake and then you make the mistake and blah blah blah. But it's also good practice just to do these simple calculations, even more complex ones if that's possible. Sometimes it's not, of course, a very complex formula. Anyway, so if we're going to see a C wave down to here, that would be a good buying opportunity with a stop either down below here at 7700, or you can wait for some kind of spurt up from whatever level is the low. This is an hypothetical level, not an actual level. Obviously, it hasn't happened yet, but that's a good target. We've got 50% at 8118, and we've got the Fibonacci down here around 8020. So again, it's a good target. It fits in with various simple parameters, and so we could see a key low, and that the rally I'm expecting above 20,000 could be with us pretty soon now. So that covers the easy part, i.e. gold, silver, and Bitcoin, which and other cryptos. I mean, it's a matter of your own personal flavour which cryptos you want to be involved with. But as I've been saying, I would suggest you certainly have some money in this market, because I think it potentially has wealth changing abilities over the next year or so, I believe. Right, look at FTSE. I mean, when I looked at FTSE on Tuesday, all I saw was this blip here, which didn't really look terribly encouraging, because since then it's plunged down quite sharply. So now have 5 waves down, ABC up, again between the magic 50% and 61.8% levels, and now looks like we've got a solid decline, a third wave decline. This is obviously wave 1, wave 2, and now wave 3. So if that meets its parameters, then the minimum expectation is to see that at least what we saw here, which is 700 odd points. So another 700 odd points. And of course, if we do see some kind of fast action into the October expiry, then it could be a lot more than that. So it's certainly worth looking at getting involved with this. Now, hopefully we're going to see some kind of 2 wave. I mean, we have got a couple of weeks till the expiry comes in. So I would expect that the support levels here might well hold, a bounce might well come in, giving us opportunities to take off short positions, which is what I'm suggesting you do. And you could leave for the last minute. You could buy puts, which at least have the benefit of being a fixed outlay. If you do see a big move, then the puts will do well. I mean, that's probably the easiest way of doing it. In fact, spread betting could be more difficult if we see very volatile action, because stops become obviously difficult to keep safe. Anyway, that's how FTSE looks. Looking at the DAX, again we've got 5 waves down off this peak. Well, not an all-time peak, but a significant peak, followed by an A and B and a very extended C, leaving me think that we're going to see new highs. It's got so close. Normally that magnetic attraction drags you into the higher level. It hasn't done so in this case. So have a look at the action since the peak in more detail. Right, have a look at the action since the peak here. I mean, it's hard to be too precise because it's not complete, I don't think, but like a 1, 2, 1, 2, 3. This is like a 4 of some description. So one more leg down or to complete wave 3, then a bounce, then a wave 5. So within a few days, perhaps, because this decline has only lasted 2 or 3 days, we should see a low of some significance and a rally. So that rally would be the thing to short, perhaps, depending on the form it takes. But it looks like we should see an opportunity to get short at higher prices on the DAX. Right, and the Dow follows the same pattern here. Again, I've been approaching these equity markets in order of simplicity as well, or easiness to trade. FTSE is much easier than the Dow, sorry, the DAX. The DAX is much easier than Wall Street in my experience, and obviously we all have our own preferences. But 1, 2, looks like perhaps a 1, 2, and now there's a 1, 2, 1, 2. Third wave coming in, maybe not over yet, but with a few 4 and 5s. So again, leading us to expectation of a corrective rally into the expiry period, and then, or at least just before the expiry period, and then perhaps all hell breaks loose over that expiry or after that expiry. But that's, of course, that may not happen. This is an outline of what could happen. And I say, certainly we are getting a very strong buy signal, I would say, on gold, silver, and Bitcoin. The sell signals on the equities are less certain because these markets are manipulated by everybody who can manipulate them, and they tend to be very, very volatile and erratic. But the 1-2 patterns are pretty clear, and certainly it's a valid count on what we're seeing. This is very critical, so please feel free to send me any questions you might have, and I can either deal with them directly to you or in a subsequent video, depending on what you prefer. But this is a time when there is a chance of making significant sums, I believe, which is why I started this short-term traders room in Bitcoin. I could actually expand that, I suppose, to other markets. I'll see whether that's something anybody has an interest in. Anyway, it's an important time, so it's a good time to get it right, as it were. And it's a bad time to get it wrong, because if you see very volatile action, your stops aren't in place or something, you're over trading or whatever. The key thing is not to actually change your trading style. If that works, don't get sort of too excited or too greedy or whatever. Just stick with what you know, and let it just produce the results that you're used to producing, as it were. Anyway, I hope you found the intro useful. Back to the report at the weekend. Have a great day. Thanks for listening, and bye for now.